Because many people are sticking to their Phillips curve arguments. The Phillips curve has not been a very effective way to predict inflation over the last 20 years. And unemployment's low. A lot of people have in mind that that's going to lead to inflation. Therefore, we need to slow the economy down. I do not think that's a good way to think of policy in this particular environment. And I would focus more on where we think market expectations of inflation are.
Thank you.
Jim, where do you see the biggest risks right now?
The biggest risks?
Yeah.
You know, I was thinking coming out to Jackson Hole here, we've not been in as good a situation as we are today for a long time. I think coming out here, a lot of times we were in crisis mode when we were doing
August,
this.
It seems,
yeah.
right, yeah.
Yeah, so I do think we're in good shape for today, but monetary policy is about trying to think out, you know,
Sure.
to play it out 2 years ahead.
But if you have it wrong, is it wrong to the downside? Are you still more worried about lower inflation or disinflation?
Inflation has been so slow, so sluggish, so low that I really think that if we all of a sudden got some heat, we could just move rates up and probably contain it pretty easily. But what can happen here is that you tip, it's a long expansion here. You could tip into recession if we play this wrong.
But pick up on what Joe is saying, because I think he has the right, sort of identified the right risk in terms of what people are talking about, which is, okay, right now, the U.S. is tightening, but Europe and Japan remain very easy, and they appear to be easy out into the horizon that we can see.
Yes.
What does the world look like if Europe and Japan start to tighten along with the United States? Are there risks out there, especially, you know, something mentioned a lot by the critics of the Federal Reserve, which is that low interest rate policy has fueled misallocation of capital, which means that there's stuff that's going to burst when the Fed and everybody starts tightening?
Yeah, I would say if they start tightening, it's probably good news because it probably means they've got something good happening in their economies. Europe did have a good year in 2017, a little bit weaker data this year. So if they came around, I think it would probably be good news for sort of the G7 economies that they're picking up.
But you don't worry about an environment where all three central banks are taking out that easy monetary policy.
If they were doing it randomly, then I would worry about it. If they were doing it in response to better economic conditions or inflation pressure, I think that, you know, inflation in Europe is even lower than it is here on their preferred measures. And so, and Japan has struggled as well to get their inflation rate up.